Hi guys, I am Rijo and welcome to my channel. Today's video is going to be all about NAV of mutual funds, that is the net asset value of mutual funds. In today's video, we are going to discuss three things. Number one, what is NAV? Number two, how it is calculated? And number three, should you avoid the mutual funds with higher NAV or should you invest in that? We often hear the term net worth. Exactly what is net worth? Net worth is the value of everything that you possess or you own, that are your assets, minus all your debts and liabilities. For example, if the total value of everything that you own or your assets is equal to 1 crore and the value of your total liabilities and your debt is 25 lakhs, then your net worth is equal to 1 crore minus 25 lakhs equal to 75 lakhs. The concept of mutual fund NAV is quite similar to your net worth. When you invest a certain sum of money in a particular mutual fund, it gives you a certain units of that particular scheme. Let's suppose you invest rupees 1 lakh in any kind of mutual fund. You are going to get units of that particular fund equivalent to your 1 lakh rupees. Now comes the question, how does the mutual fund decide how many units to be allotted to you? This is where NAV of the mutual fund comes into play. You are going to get units as per the NAV of that particular fund. NAV is the per unit value or the per unit price of any particular mutual fund. For example, let's suppose you want to invest into HDFC Advantage Balance Fund. The NAV of this fund as on 6 March 2023 is roughly 348 rupees. Now I leave it to you guys to tell me how many units of this fund are you going to get if you invest 1 lakh rupees in this particular fund at an NAV of 348. Now comes the question, how is NAV calculated? Any mutual fund invests the money collected from the investors in securities and market. These securities can be stocks, bonds, futures and options, or company FDs. They invest the corpus based on two things, that is fund's investment objective and the type of scheme. To make these investments, the fund houses have to incur some expenses as well as incur some liabilities. So the total NAV of a mutual fund is the total amount of assets minus the liabilities of that particular company. Now comes the question that what can be the assets of mutual fund scheme? Well, majorly the assets of mutual fund scheme can be the market value of the fund, number two, the cash, number three, any kind of liquid asset or receivables, number four, dividends on stocks, number five, interest income on debt securities. On the other hand, the debts can be liabilities and the scheme expenses like expense ratio. Here, one more thing that I would like to tell you is, as per the SEBI guidelines, all the mutual funds are required to publish their NAVs on every working business day. Now comes the question that why is NAV useful? Well, NAV primarily reflects the total value of the securities in a portfolio. And the value of the securities in a portfolio is affected by the market price. Therefore, the NAV will also be affected by the market price. Based on the change in NAV over a period of time will let you know whether you have made profits in a particular fund or you have made loss. For example, let's suppose today you start investing in any kind of mutual fund with an NAV of 200 rupees. And over a period of 10 years, the NAV of that particular fund has grown up to 450 or 500 rupees. Definitely in that case, you have made a lot of profit. But on the other hand, in the same scenario, if over a period of 10 years, the NAV of that particular fund has gone down to 150, then definitely you will incur losses. Now comes the question, should you invest in any particular mutual fund based on the NAV of that particular fund? Well, there has been a lot of misconception regarding this. General public always believe that any fund with high value of NAV is more expensive and therefore you are going to get less number of units, therefore low profits. This is absolutely wrong. My dear friends, you should never ever shortlist any mutual fund based on the value of NAV. What you should be majorly looking at is your returns? Well, the underlying statement is that it is the value of your investment which is more important rather than the number of units that you're holding. Let's look at it with an example. Let's take two mutual funds, HDFC Blue Chip Funds and ICICI Blue Chip Funds. As on 9th March, the NAV of HDFC Mutual Fund is 35.7 and the NAV of ICICI Blue Chip Fund is 68.08. Now, as per NAV, it is more beneficial to buy HDFC mutual funds because it looks cheaper and buying this will help us to have more units, right? No, that's absolutely wrong. We have to look at the annual returns of these funds. Looking at the annual returns of the last 5 years, HDFC's annual return is almost 11.4%, whereas ICICI Blue Chip Fund's annual return is nearing 12% for the past 5 years. So my dear friends, it makes more sense to invest in ICICI Blue Chip Fund rather than HDFC Blue Chip Fund. Let me make one thing very clear that this is not an investment advice. I have just used the fund's name or the funds for giving you the example to make the point clear. Now that's the end of the video, guys. If you have stayed with me till now, that means you have enjoyed this video. And if you have really enjoyed this video, I request you all to subscribe my channel and press the bell icon for further notifications. Share this video with your family and friends. That will help us grow. Happy investing!